Hey there, this is Bill with SmartTrades.com, and today is Monday, September 24th. It's around 12:35 p.m. Pacific Time, and as always, if you would like more frequent updates, please visit SmartTrades.com and subscribe to my newsletter. We also have an Amazon store there with some suggested reading, which you might enjoy, and that store is going to expand over time. With things that I can suggest as far as reading material and perhaps even computers and whatever things that might be of value to traders. Anyway, let's take a look at the S&P. It's been some time. As you may remember, we were looking at the S&P back here. We were looking for a breakout of this contraction and a move up to perhaps the 1438 level. We got that, and then some. QE3 came out, and that indeed was out of another consolidation pattern. One of the things I always emphasize is to take the market as it comes, to take it one step at a time. And the market really doesn't care about my projections or anyone else's for that matter. And so when the market has a consolidation and an uptrend, more than likely it's going to break out in the direction of the trend. That said, nonetheless, we want to, obviously, try to look for changes in trend if they are indeed developing. But when we don't get them and the market consolidates in the uptrend, usually means we're going higher. That was the case back here on this possible wave 4 in the 1400 area. And again, it occurred in the 1438 area, actually blowing out that target. And indeed, it's happening again right now. It looks like we are going to make new highs. There is an area to look at up around 1488, and we'll see if indeed it gets there, if we have a terminal pattern at that point. And the other thing that I look for is some kind of confirming pattern off of a target rather than just set a target in stone and see what happens. The targets that we've had actually have worked out pretty well, but the market has come down off of them in corrective style patterns, which is a clue that indeed those tops would not hold and that they would be blown out. Something different than that I do rather than the idea of just standing in front of a market and standing by the idea that your target is hit and therefore the market's going to turn at it. Just doesn't work out that way some of the time. So anyway, here's another alternate count. On the first count, we've got a possible A, B, and then you can count 5 waves up. That count has become quite a bit of a stretch. I think it better counts as a zigzag, in fact, a possible triple zigzag working its way higher. That's one reason I think we are probably peaking. That said, there are other scenarios, and here's a long-term count that I've had posted for some time in my newsletter at SmartTrades.com, and I've got the end of the world here around the 21st of December, and it's interesting because if we do break through resistance, which is up to, as I say, around 1488, perhaps up to about 1500 in the S&P. If we do break through there, you'll have 2 channels, fairly large channel trend lines coming in that area, just above 1600 or so in the S&P. Additionally, that's an A equals C on this count, and 78% approximately of the W wave, if you count this whole pattern as a double zigzag off of the 2009 low. Long-time subscribers and video watchers will remember that all along I've been counting this as a B wave up. B waves are notoriously hard to predict. There's lots of variations that could come into play. I've been guilty of thinking that we would have a larger corrective pattern down and perhaps as low as 1,000 or 960 in the S&P before going up to test this high and finish off our B. And indeed, we may still do that, but one possible scenario is that we're just going to continue on up, and it is interesting that, and I say end of the world somewhat sarcastically, but if indeed this is a B wave peak, and A was completed back in March of 2009, this could be quite a substantial top up there, and the decline from there could be on the big side. Certainly the target, if this is a flat, would be back below that 966, the 666 level in the S&P, and that's long term. One thing that makes me think, continuing to think that this is indeed a corrective rally, be it a B wave or something else, is you have diminishing volume and momentum. The black line here is the ADX. Obviously, these red and green lines are volume. We have a little bit of a spike up in volume. That is not inconsistent with the C wave in a B wave pattern. So we'll see. That's one scenario to watch out for if we, again, blast through the 1500 area in the S&P. Now back to the shorter term pattern. We're oscillating, but in a more or less sideways pattern around the upper channel in the S&P. Overall, this pattern is, it does look corrective, and you can see here a pretty well-defined ABC, which I posted in the SmartTrades.com newsletter, on Friday. Or actually, that was Thursday that we posted this ABC pattern, suggesting that we probably have some kind of rally out of there. Nasdaq a little different. Nasdaq possibly can be counted as a peak. It could also be counted as a B, and this could be a C wave. So this is one of the ambiguities of Elliott wave. Sometimes a C wave or a impulse wave one down off the top can look rather identical. So what we want to see here is a corrective pattern that fails to make a new high to confirm a peak in the Nasdaq. Apple. Apple is the tail that wags the dog. Apple is about 18% of the 18% of the Nasdaq, about 5% of the S&P 500. That's rather extraordinary. I don't think I can remember in my years of trading, and I've been following the markets professionally since about the mid 80s, and started watching them actually in the 60s. You've never had, again, to my memory, a single stock that was such a large component of both the Nasdaq and the S&P. So as goes Apple, so goes the S&P, and particularly the Nasdaq. So one place to watch here, if this is a peak, even a short-term peak in Apple, the area to watch is going to be about the 696 up to about 701. We've got a little lower channel trend line there. You've got weak volume on the bounce so far. We shall see if we were to get a five-wave structure up to complete an ABC. I'd take a good look at that, or lost momentum in that zone and start rolling over, not necessarily to short Apple, but as a clue for a peak in the Nasdaq in particular. Facebook, long-time subscribers will remember we were looking for a target down. Actually, 1655 was my ideal target. We had actually a range of about 14 to 17 that we had been looking for some time. But as we had an impulse off of that low, I believe it was at 1755, we decided that we probably had a bottom, and you can see here a pretty nice corrective decline off of that rally, which came right up to previous fourth wave resistance. Classic Elliott wave stuff. We've got a gap up in third wave, and from there we can count 5 waves up. And I believe we are correcting what is probably an A, or even more likely a small degree wave 1 up to, I believe it was about 2337 in Facebook. A nice ABC decline filling that gap down to around 1940, 1950 would be something to watch out for. But we shall see. A nice impulse again down. That, I believe, is an A. Here's a little more detailed chart. This was posted on the SmartTrades newsletter as well. And again, here's that gap. These are the previous 62 and 38% retracements based on what we thought at the time could be 5 waves up to this point. And again, here's that corrective pattern. You get a corrective pattern off of your 5 waves up. You're probably looking at a 4 instead of a 5th wave peak there. And indeed, that's what happened. And from there, you can see a pretty nice 5 waves up to the peak. Just exceeded the 2310 level, which was our 2308, 2310. That was 1 equals 5 on 2 degrees of scale. And from there, we are finally getting a corrective decline. At least I believe it is. We'll see how it plays out in Facebook. Intel, very interesting chart. I I'm not exactly sure of the particulars of the count. Something to keep in mind with Elliott wave. Oftentimes, parts of a count will fit into the Elliott wave, symbology and so on. But I wouldn't be overly particular with exact counts with individual stocks and commodities. They just oftentimes are not going to be perfect in terms of Elliott wave. That said, there's still many useful patterns. One of them is that if you get a triangle type pattern or fourth wave type pattern, obviously the next move out of that pattern is going to be a fifth and possibly final wave. So watching here for a possible bottom in Intel, it's possible we still have 1, 2, 3, 4, and a fifth wave low. We might have a bottom in. We might have a retest. I'm not sure, but it's a point in time to start looking at Intel. And Intel is interesting also because it's got about almost a 4% yield at this point. So if we were to get any kind of significant bottom here and a bounce, not only could you make money on the rally, but you could also make money on that yield. And I like that kind of double dip. Bank of America, I have actually been surprised by the strength in Bank of America. That said, it is what it is, and it's rallying pretty well lately. And off of the recent peaks around the 980 level, we've got a corrective-looking decline. So new highs are indeed probable once again. Certainly a bounce out of this corrective pattern. I'd monitor it in real time, and again, I'll do that at SmartTrades.com. Part of the reason for the bounce, obviously, QE3 and strength in the euro. In other words, it costs more dollars to buy less stock, so to speak, and it's basically an inflationary rally in stocks and certain commodities, particularly gold. Anyway, here's a possible short-term count in the euro. I do think that here's the ADX peak, typical of a third wave, ADX decline off a possible fourth wave developing or even finished here, and a small possible fourth wave. Again, with the currencies, just as in individual stocks, don't expect perfection in terms of the wave counts, but on a generalized basis, you can see here clearly, a kind of third wave type impulse up. And you have your fairly deep 1-2, 1-2 type pattern up to that third wave, high ADX, lowering ADX on the corrective decline. Crude oil. I think we have a short-term peak in crude up there just around 100 or so. An imperfect 5 waves down, or certainly impulsive-looking decline. Again, the ADX peak. The ADX is lowering here on a possible 5th wave test of the previous low. So perhaps a corrective rally in crude, and if we do get that kind of corrective confirming rally in crude, I would look for lower prices in crude oil. And finally, the bonds. Couple scenarios longer term in the bonds. I'm, to be honest, not certain about the long-term count of the bonds. I'm watching the short-term swing points, and we've got some pretty clear ones here. There's around 146.10 or so. You can see multiple swings off of that area, both in terms of resistance and also support. That has held on the recent lows. And then we've got resistance up around just below 148, and then also up around 148.5. For now, I'd stand aside the bonds, but I think that the pattern up does look corrective. The pattern down is potentially corrective. When I see that, one thing that it makes me think about is the possibility that we're in a longer-term triangle. That said, again, I'm not sure about the bonds, so let's watch how it plays out. And if you would like updates on a more frequent basis, please visit me at SmartTrades.com. And thank you very much for watching. I'll try to get out some updates sooner rather than later here. And I really appreciate it. Hope you have a great week and are enjoying fall weather like we are here in Tahoe. Tahoe's just great this time of year. New England's great too, so as is a lot of the world in early fall. Anyway, thanks for watching. Have a good one. Bye-bye.